Another interesting edition of the Market Review, where we discuss key developments in the financial and capital markets as they affect the economy. Our focus today will be investing in the period of global uncertainties, and my guest is Mr. Kalu, a certified financial educator. Nice to have you on the program, Mr. Kalu.
How are you doing? Good morning.
Yes, good morning. So our viewers, before we begin the conversation, let's give you some key market stories from last week. Two past presidents of the Nigerian Stock Exchange, Alhaji Aliko Mohammed and Dr. Gudi Ibru, were recently awarded honorary fellowship of the Chartered Institute of Stockbrokers in recognition of their contributions to the growth of the Nigerian economy. At the event marking the 30th anniversary ceremony of the Institute, 50 associate members also joined the prestigious group of fellows. In his acceptance speech, Ibru advocated the need for investment in equity markets, saying the average return in Nigeria and Africa is 30% and 35% per annum. And those were some of the interesting stories from last week. If you're joining us at the Market Review, and our conversation today is on investing in period of global economic uncertainties. And my guest is Mr. Kalu, a certified financial educator. First, Mr. Kalu, we've seen the unfolding developments with the FTX crisis in the crypto market and how this has affected the investors across board. But for you, what's your perspective? What is your takeaway from this development as it has to do with investments and the need for people to be very discerning?
Yeah, well, let's just say it's this story that keeps on happening, right? You find names like the Madoffs that are like, supposed to be well known, should we say, well regarded in the market. And the end of the story, it's a Ponzi, or it's the investment is not what it was promoted as. I look at it this way: whatever you do, go back to the basics. You have to diversify. No matter how good the investment is, you've got to diversify where your money is. Diversify your currency, diversify where your money is placed, diversify even your geography. So that way you can't predict the future, but you can hedge against unseen events like the FX. And like, who would have seen this coming? Who would have seen Madoff coming? No one would have, right? So the more you take proactive risk management, strategies and plug into your portfolio, I would say the better for us all in. There's no way you can plan for this. So the only way you can is to sort of like hedge against these, we say, unseen events that will keep on occurring. Yeah.
So the key word is diversifying our investments. How do young and already established investors, how should they approach the capital and financial market in this period as we see those news on developments and concerns about possible global recession and, of course, the impact on emerging markets, including Nigeria? How should young and already established investors approach the capital and financial market this period?
Yeah, good question. I think it's two things, right? What's your strategy? You have to have your strategy before you even go into the market, which means what's your objective? What's your risk profile? How long do you want to invest? These three questions you have to ask and you have to answer. That forms your strategy. Once you have that set, right, then of course you're now doing tactical adjustments. So if you're a 25-year-old guy, and the market in 2023, no one can predict what will happen in 2023. But if you know I want to invest for 20 years, I can take risk, right? My objective is to retire when I'm 60. You already know the broad outlines of your strategy. Then you go into the market with that strategy. You diversify, you reinvest your profits, you watch inflation. Those are all tactical decisions based on the initial strategy that you have already identified before you went in. So the point I'm making is this: if you go into the market blind, that's when you get caught out, right? If you are an older person, then certain asset classes should not be in your portfolio, right? You don't want to do crypto or do a lot of variable income like stocks. That sort of allows you not to get caught up in the uncertainty that will come. The markets are uncertain, but it's the uncertainty that pays you the return. So what you get in return is the market rewarding you for taking a risk. So I will say start out with your objective, your strategic objective, i.e. 5 years out, then do your tactical adjustments as you are in the market, 3 months, 6 months, adjust to what you see. No one can predict the market, but we have to prepare for whatever we do find once we have funds invested in that market.
Very, very interesting perspective. The need to be strategic, not just going to the market to invest, but be strategic. I remember the 2009 financial crisis, a lot of people were just going to the market, but a lot of people didn't have that strategy. So when the crisis came on board, you see how it's taken a lot to even recover, even 10 years after. But what should be the key areas to invest in to navigate a looming economic crisis?
Well, the one word I would say is liquidity. So invest in liquidity, which means you want to have your savings in a manner that you can invest when you see opportunities. Because when you have a crisis, you have the risk, but you also have the opportunities. If you are liquid, you can take advantage of the opportunities. So if we're hearing all the news today, recession is coming in the US, right? And the US is going to be the largest economy in the world. So if the US goes into recession, it dovetails into every other economy. So if you are hearing that sort of news, right, should you stop investing or should you invest more? Again, depends on your strategy. But the way to navigate uncertainty is to have liquidity. Liquidity gives you options. It makes you nimble. You can go in, you can come out if you are liquid. So I think the only way, like we can say, the only strategy that we can say we're going to go into an uncertain period is to try to be liquid. Don't lock yourself into long-term asset classes, right? Have asset classes that you can get in and get out and then ride the wave. If there's going to be a recession, rates are going to go down. So you take advantage of it. You get out of a trade and you go into a new trade. So the word is no. What's your strategy? And of course, invest in liquidity. Yeah.
Yeah, and as we wrap up, Mr. Kalu, you see that the equities market last year, when the Nigeria Exchange Limited hosted its first ever capital market conference, it was revealed that the average investor is 52 years. And being in this space, we see how active you are also on social media trying to engage people. How can we make this market more attractive to the young people? Because those are the future drivers of the market, and then begin to balance it out.
Yeah, I mean, where do the young people trade? They are all online, right? They are all online. Look at what an app like, say, just like I mentioned, name like Robinhood has done. They've taken very expensive shares. One share of Tesla is nearly $1,000 back then, right? And they break it into fractional shares and they put it online. So that way, if you're a kid in the US, you can, with $10, invest in Tesla. It's going to be on your phone. So they can relate more to that, right? So the answer really is that the Nigerian Stock Exchange has got to be more online, right? More text friendly. This is where the youths are. Then you've got to find a way to break down the prices of, say, those high cap stocks in Nigeria to make it fractional so that the Nigerian youths are able to invest with, say, even 100 naira. That's just the model that has worked even in the West, and it can work also in Nigeria. If I want to buy a good stock and I don't have the money, can I just buy 10 naira worth of that stock? Of course, it's possible if we then create a fractional framework in the Nigerian stock market. And we insist that all firms have got to be online, have got to do dividend reinvestment plans. So it's easy if I invest, I just do a dividend reinvestment and I get my dividends into my account to buy more shares. I don't have to go to registrars. So the idea is to use technology to attract and to retain the very young investors into the market. So as they go along, they become real, real investors. Or attract them in, show them the ropes through IT, and of course they'll stay in and they will eventually become capital and money market players as they graduate and get older. Yeah.
Thank you very much, Mr. Kalu, Certified Financial Educator, for this very interesting conversation. A lot to learn around investing in a period of global economic uncertainties. The first is that, of course, we need to diversify our portfolio. Second key thing is need to have a strategic objective when you're engaging in the market. And of course, you said investing in liquidity. So those are key tips that we must take this period as we navigate looming economic crisis globally and, of course, in emerging markets like Nigeria. Thank you once again for the time, Mr. Kalu. We look forward to engaging you further on the subsequent editions. Thank you once again. And that will be all for this edition of the Market Review. If you have questions or suggestions on our conversation today around investing in periods of global economic uncertainties, please send an email to Ottoabasi@Abasiekong at proshare.co displayed on your screen. Also, you can follow our social media platforms displayed on the screen to get our latest news articles, reports, and activities in the capital markets. Also, you can join our website, www.proshare.co, to get all our latest reports and analysis. Don't forget that you need to be informed to make the right investment decisions. Thank you for watching, and keep discussing the financial and capital markets because they create wealth and economic opportunities.